Hey, welcome back everybody to the FourStar Today's Market Explained podcast. This is our episode just before the 4th of July holiday. Here it is on Thursday before everyone is already leaving. Everybody's probably already left, actually. Anyway, this is Brian Castle, your host. My co-host, Mr. Chris Reardon, is with me. Mr. Chris, welcome.
Thank you, Brian. Good afternoon, everyone. Glad to be here. Happy early 4th of July, and glad to talk a little bit about the markets as we have steamy weather pretty much across the U.S. and it's heating up coming in fourth.
Very steamy, and the equivalent of 100 degrees impact and all that, all across the Midwest and New York and everywhere. Anyway, but I hope everybody has a good 4th of July. Chris Reardon, I should say, folks, if you're new to this show, is the Director of Development for FourStar, which is all the products and services and growth and the money management and all that great stuff that investors like about our investment management process and operation. He's a boy from Cleveland. He's got three young kids. He still loves his Cleveland Indians or Guardians now. Anyway, well, again, Chris, welcome to the podcast.
Thank you, Brad. Or thank you, Brian. Glad to be here.
All right, and I'm Brian Castle, your host. I'm the CEO and founder of FourStar Wealth, and I'm the advisor to insiders. I'm the husband to Tripty, the amazing Tripty, I should say, and father to two wonderful adult men, Quinn and Evan. So that's our lineup for today. It's me and Chris. We're going to go through the markets. We're going to go through things that are going on in the world, and then things that we see out there that we think are interesting for folks to listen to. So, Chris, why don't we get started talking about some markets?
Sounds good. Yeah, I mean, first let's kick it off, I guess, going through as we traditionally do the asset class rankings, because there certainly has been a bit of a change here since the last podcast. So international equities is still holding down that number one position, and it's actually continued to firm up. It gained 13 points, so it has crossed into the over 300 threshold. It's at 308 tally points. And domestic equities maintains that number two position. It gained 16 points and it's at 301. So it as well has crossed over that 300 point kind of cliff there. So, interesting to see. Obviously, domestic, even though it still lags, it did gain 3 points since the last podcast on international equities. So it's really kind of neck and neck really for that one and two position. But commodities was the biggest kind of story, and that had a huge drop since the last podcast. So it's minus 67 points. And it's all the way down to 147 tally points. So more than half the top two asset classes as far as tally points score wise. So we saw a huge drop in commodities really in the month of June. And cash, which is in that fourth position, it gained 11 points. So it picked up some from commodities. It's at 129. So if the trend continues, we could see cash overtake commodities and start to see commodities move into the kind of the bottom three positioning there. Currencies is maintaining that fifth spot. That's up 13 points, and that's at 108 as well. And fixed income is still dead last. It's at 94 tally points, and it gained 14. Really the story was commodities, which just had an absolute collapse really in June. After a little bit of a recovery, it kind of bounced back a little bit, and then we just saw it kind of collapse. And really every other asset class, gained on that pullback from commodities. So we'll see if that trend continues. Certainly, there's major moves behind that. We have a stronger dollar, which is impacting gold. We have the Iranian negotiations going on, which is impacting oil. So we have a lot of downward pressure right now on commodities that is really putting that pressure on it. So bit of changes there.
Yeah. Now, Chris, just a couple comments on those thoughts. So the cash has been slowly rising a little bit, but cash is not obviously a long-term investment, and you could do better in other things. But it's been mostly coming out of commodities, hasn't it? So commodities are doing certain commodities are doing worse than cash, so then cash is gaining. And bonds, fixed income, which has been dead last for a long time, has been slowly rising as well, and that can maybe even overtake currencies. So we're seeing some other changes even in a rising market. We're seeing changes underneath.
Correct. Yeah. I mean, we're starting to see a bunch of changes there. I think with some of the movements we've seen, like I said, the stronger dollar, potentially interest rates instead of being cut, hold or steady and moving higher. There's a lot of things I think that are changing the narrative really around the markets, and we're really seeing that be reflected, I think, in the asset classes, especially those bottom three, which, as you said, Brian, are really kind of the benefits of this major pullback.
Absolutely.
So switching over to the sectors, kind of how is this impacting that? So information technology remains the number one position. On the last podcast, it overtook energy, and it's up 27.84% year to date. So continues to be a strong mover there. Energy is at 21.39%, and that's still in second, but it's barely hanging on there. Industrials is rising. It's up 21.3 or 24%. So just right behind energy in that third position. So those top three are hanging in the 20s. Then we have a bit of a drop off. The fourth best sector is real estate. That actually moved up one spot, and it's up 11.8%. Year to date, materials dropped one spot, so we had a bit of a switch there, and that's up 11.13 year to date. And then consumer staples is in the sixth spot, and that kind of rounds out the bottom of that top half, and that's up 8.40% year to date. Utilities is in seventh. That's up 8.22%. And it's crazy because if we go back even the beginning of the year, utilities were one of the stronger sectors. And now we've seen it kind of drop. Healthcare had a major move up. It was one of, I think, the coolest stories. It's now up 5.14% in the eighth position. It moved up two spots. That's great to see. For a while there, healthcare was one of the few negative sectors on the year. It was down 3 or 4%. So it had a nice jump there really in the month of June. Consumer discretionary is up, but barely. It's up 0.81% in that ninth position. And that moved down one spot. Financials clawed its way out of the cellar. It was the worst position or worst sector. Last podcast, it's now number 10. And that's negative 0.37% year to date. And the worst sector, and this kind of surprised me actually, to be honest, is communication services. And that's down 4.54% year to date. And that dropped two spots since the last podcast. So a bit of a change there. And we're really seeing, I mean, the tech narrative we kind of talked about, really the last podcast, we started really seeing that. But I think healthcare certainly has started to gain a little bit of momentum in the short term. And obviously energy has been pulling back, but industrials, I think, has been another one that has really kind of stayed steady right there and continues to gain momentum at that top spot. So, we'll see. We'll see how that continues, but we're certainly seeing a rotation change within the markets. We'll see if that continues.
Exactly. Well, and it's interesting because we saw these hot Mag 7 stocks take off, and then they had a bad fourth quarter, had a bad first quarter, and then there's a rally, and then it faded again. So they're kind of even on the year. They're not really doing that well. And even though the technology stocks have done well, it's not technology like Mag 7. It's like technology like semiconductors. So all the companies that are involved in building data centers, which has become kind of a political football because they're so aggressive and taking over certain communities, people are getting nervous now. There's too many data centers out there, but the data's out, and they're getting 20 or 30% more for their chips than they were even a year ago. And so there's this explosion in semiconductor stocks. And so we'll see how long that'll go, right? So these trends explode and then they slow down. The Mag 7 exploded for 2 years and it slowed down. So now we're seeing a semi explosion and an energy pullback and Mag 7 pullback, right? So those stocks are about even on the year. So it's kind of interesting how things play out.
Yeah, I mean, it's really been driven, as you said, Brian, heavily by the semiconductors and the memory chips. I think the memory chips were kind of the biggest one that took people by surprise. A lot of people didn't realize that. And so some of those were significantly undervalued. And so you saw some of those jump up 500%, year to date, just ridiculous numbers. We talked I think the last podcast or maybe two podcasts ago about Micron, which is a memory, company, if you will, out of Idaho, potato
Right.
country, and it doubled in value in like 30 days. So just incredible moves there we're seeing. And a lot of that's being driven. I mean, the market right now is AI, right? So these
Yeah.
data centers, you have memory, you have these semiconductors. So really the infrastructure needs to really power this AI. And there's definitely been a lot of speculation on it, whether we're in a bubble, things like that. That remains to be seen. But we certainly are kind of in an extremely hot market, I will say, at that point.
Yep. Absolutely. Brian Castle, I'm the CEO and founder of FourStar Wealth Advisors. Now, we built FourStar on one simple belief that every client deserves clarity, confidence, and strategy built around their financial story. For over 40 years, we've guided clients through every market cycle, helping business owners, families, retirees protect what they built and then grow their holdings to meet the needs over their entire life for them and their family in the future. We are fiduciaries, not salespeople, and that means we sit on the same side of the table as you always. So, from personalized portfolios to advanced tax and estate strategies, everything we do is about creating long-term freedom and peace of mind for our investing families. So, if you're ready to align your wealth with your goals, visit fourstarwealth.com. Let's start building your future one smart decision at a time.
So, um, switching to current market themes, at least what we saw kind of in June, I think this is a good kind of synopsis, is beginning of June, we saw the S&P just continue that momentum. But then we got this injection of volatility kind of starting towards the very end of the first week of June that really is carried really till today. And that injection really is two catalysts. One was Broadcom, one of the chip manufacturers, they missed on guidance. And then the other one was we got some stronger jobs reports. We got, quite frankly, good economic data. But what that really did is cemented the fact that the Fed most likely is less likely to cut rates this year. And in some cases, people are even speculating a rate hike sooner than a rate cut. So that really drove the market into a little bit of a spate of volatility that we've seen continue to play out really to this day. But then we've had that be counterbalanced by the US-Iran peace frameworks, which have certainly buoyed the markets a little bit. But we really have this tug of war going on right now. In one case, you have the expectations, the estimates, the earnings of these companies, which are up 20, 30% almost every quarter. And any miss there is heavily penalized. And even in some cases, meeting estimates is heavily penalized. You have the stronger dollar, which we mentioned is impacting gold. It's impacting the potential for interest rates, which is, putting pressure on the market. And then on the other corner, you have the hopefulness that we will see a fully realized peace negotiation and a peace deal and everything for with Iran that's going to stop. And we've already seen oil drop significantly, so that's going to help inflation. So there's these two narratives really jousting back and forth. I would say, at least in the chip sector side, I think we've seen that get impacted the most. Semiconductors really the last month get impacted the most. I would say outside of oil, which has certainly been hit. But we'll see. I know the Dow has been strong. I know, Brian, you've mentioned that before. So we're seeing some value stocks really benefit more.
Yeah. So the Dow stocks are doing really well, and they've been the strongest stocks in the sector, strongest sectors, and that the dividend stock sector has been much better. So, that's done very well for us. And without the volatility, Chris, that's the thing. The S&P sectors keep churning around, moving. They all end at a certain point, but the movement within the index has been pretty wild. And if you're in the wrong groups, you could get hurt badly. And if you're in the right groups, you could do very well, even much better than the index, where it was a lot more steady in the dividend stock world.
Yep. No, I mean, exactly. And I think we've really seen those have really buoyed in. And one interesting thing with the Dow Jones Industrial Average is Alphabet was actually recently added, actually kicked out Verizon that got replaced on there. So we're starting to see a little bit more of a different flavor. You used to think the Dow Jones Industrial Average as these Dow Chemical, very industrial oriented companies. And, it's starting to get replaced in many cases by, um, all these other Mag 7, whatever you want to call them, companies as they have really taken over the market.
Absolutely.
Um, Going on to some economics, I'll touch on. So I think one of the biggest things we saw the first FOMC, the federal meeting with Kevin Warsh. Couple important things to point out there. As expected, they had a 12-0 vote to hold rates steady. No, I don't think that was any surprise. But 9 of the 18 FOMC participants are now projecting at least one hike by the end of
Mhm.
2026, and only one is seeing a cut. So
Mhm.
that's where we're really seeing expectations kind of flip, and that's been this injection. One of the main drivers of this injection we've seen in the last month is the market's trying to readjust for, the expectation of originally potentially a single rate cut, maybe towards the end of this year, things like that. Now, most likely no rate cut at all, and maybe even a rate hike.
Mhm.
Big numbers there. The Fed raised their inflation forecast. I thought this was pretty interesting.
Uh-huh.
Their headline PCE number, they raised to 3.6%. That's what they're forecasting. And that's from 2.7. That was the forecast number in March. And core PCE, they raised to 3.3 from 2.7
Right.
in March as well. So, be really interesting to see kind of how, I mean, a lot of people were looking at this meeting. Obviously, a lot of politics in it with Trump and everything, and Powell and all that kind of butting heads. A lot of people were looking to see how was Warsh going to react. Was he going to be overly favorable to lowering rates, which Trump has said, kind of been very vocal about wanting. And so far, it seems like he's kind of held his ground. I think
Mhm.
obviously the numbers have backed up his narrative so far, but we'll see if
Mhm.
that continues. It's just kind of the first glimpse right now.
Well, it is interesting. Powell got the ire of Trump for not lowering rates and not doing what Trump wanted. And then by the time he replaced him, he got a new Fed chief who was hoping to lower rates, but then realized you really can't lower them now because inflation's coming back. And so he ends up getting the same result than he would have if he had Powell, because Powell was trying to keep rates where they were and maybe even raise them. And now Warsh is in that same camp. And then just to counter that trend, once they came out with all those expectation changes, Chris, that you talked about, we've seen some inputs in the inflation world that were lower. So, well,
Yep.
now just in the last week. So we'll see if that continues, and maybe in the inflation bump again here has had its run, and then we go back to lower inflation trends, and maybe Trump does get his decrease in rates by October or something. Who knows? We'll see.
No, yeah, I mean, certainly. I mean, I think one of the biggest factors in the inflation has been energy. And with the kind of the peace negotiations, everything going on with the Iran, I think the oil is pretty much back to pre-Iran war, Iran conflict levels. So that is certainly, it might take a month or two before that to kind of fully, work its way through. But that will certainly lighten some of that pressure. I'll touch real quick on a couple of the CPI or inflation reads we had. So the May CPI number came out, and that was up 0.5% month for month, and up 4.2% year over year. So that continues to be pretty hot. That's the highest annual rate since 2023. Core CPI, which excludes food and energy, was up 0.2% month over month, and just 2.9% year over year. So, once again, that excluding energy, you can see that major impact. The energy drove the headline, so the core, the main CPI number, not the core, drove the headline energy up 3.9% in May. So that's month to month. So that means year over year, energy was up 23.5%, with gasoline, obviously a major component for the consumer, as
Mhm.
well as industrials. Gasoline was up 28.4% year over year. But core commodity prices outside of energy and gasoline actually fell 0.1% of the month.
Mhm. Mhm.
So kind of interesting. And I think to your point, Brian, what you said, assuming that we don't have any reignition or anything of the Iran conflict, anything like that, we should see this. Like I said, it might take a month or two, but we should see that inflation kind of start to taper back down to more
Yes.
respectable levels. Shelter costs were up 0.3% month over month in May, which is actually half of April's pace. So that actually is coming down, but it's still up 3.4% annually. So, we'll see. I think that the biggest thing that we have to kind of watch and see right now is obviously the Iran war conflict, the negotiations there. It's seemed like it's moving along, but there's also feel like every weekend there's kind of some news story about some little strike here and there. And I think there's people are still kind of on pins and needles of is this going to kind of kick things off again? Are we going to see a reignition there of the conflict, which obviously is going to have a major impact on oil prices if we see that. So we
Well,
haven't seen it yet, which is
mhm.
promising.
Well, it's interesting, Chris. I want to comment on that if I can for a minute. That initially, the inflation bump that happened was caused by energy, and everyone was in a bit of a panic because Trump decided it's time to deal with the Iran issue, and they've been at war with the world and certainly America for 46 years, and so they decided to neutralize them. They took out three sets of leaders, as we all know now. Now they have a new set of leaders, who's the son of the original Ayatollah, and they have a kind of a mixed bag of people running the operation there, the Revolutionary Guard and everything. But then Trump said he was pushing hard for a deal to get a deal, and they thought it was a sign of weakness. And so they're acting very belligerent, while they're agreeing to things. Then they immediately break the agreement. They decided to let all the ships go through the Straits of Hormuz, and then they're still uh, inflicting pain on different ships and when they're not supposed to, and they agreed not to, and they're doing all these things that they agreed not to. So the minute they agree to something, they violate it. But Trump's been pretty patient because he wants to have a deal and he wants to keep oil prices down. And meanwhile, they're supposed to get a lot of money to rebuild their society that is not going to get released until they finally agree to everything. But they may have to go back in and finish the job and actually get rid of the Islamic Republic regime and get a new, more secular regime like the Shah's family from back in the 1970s and that kind of thing. So it's interesting. So while there was a panic because oil prices went up, now oil prices are coming down, but yet things aren't really totally settled over there, Chris, are they? I mean, we've got a ceasefire kinda, but the minute they agree to something, then more bombs are sent both ways, and it's
Hmm.
really still kind of a mess, isn't it? But
I mean, 100%. And
but
and I think you have the wild card I'll mention of Israel. I mean,
right.
we can't necessarily control what they do. So there's a lot I think still up in the air on it.
But I think though the markets are kind of perceiving that, okay, we'll deal with this now, and now we're going to let oil through, and Trump's going to control it, and it's not going to be as bad as it was. So it's almost like we're moving on post oil, from post oil bump, right? And that's why that inflation number might start coming back down, right?
Yeah.
So.
Well, and I think Trump has really shown the want to keep energy prices low, for lack of a better word. So,
Hmm.
even if there is a reignition, I know one of the main things has been for Trump to kind of keep control of the Strait of Hormuz, and try to keep things flowing, even if there is a disruption there, to really minimize the impact. I do think one thing that was very smart, in the final, I think actually they maybe are allowed to do it now, but one of the things that came out of the negotiations is Iran would be able to sell oil again, which I think is actually kind of quite smart because it's a chip you can give Iran, but it also solves two issues, right? High gasoline prices, that's going to bring it down quicker. You're adding more oil onto the market, as well as
Yep.
giving them a chip. So it kind of achieves two things, that are, work for the US pretty well. So,
Mhm.
I think Trump is certainly committed to keeping those prices down. So, the market has certainly seen that, and we've seen, I think, that really impact the oil price, even with some of these little spates of reignition, like little shots here and there. We really haven't seen oil spike that much from those, as you would expect.
Well, and makes no mistake about it, Chris, the whole oil movement now, is all about the election, right? So we have a midterm election, and Trump is trying to keep the Republican House and keep the Republican Senate. And if oil prices, inflation comes back down, they can't get blamed for it. So he keeps saying he's confident in a deal, confident in a deal. Meanwhile, the minute they strike a deal, they bomb, and then they attack. And so, there really is no evidence as to why he would be confident, except he just keeps saying it, and the market feels okay with it. And he's talking oil prices down, even though there's still conflicts going on. So it's quite interesting to see how they're making this happen. But it is all about the election for sure.
Hmm. No, yeah, for sure. Switching over real quick to the jobs market, and it was one of the other big players there. May non-farm payrolls came in at plus 172,000, which was more than double the consensus estimate of like I think it was 80 to 88,000. March's payroll numbers were actually revised up to 214,000 from 185. And April's numbers were revised up to 179 from 115. So we really saw a huge boom with the main non-farm payrolls, and that was one of, as I stated before, one of the catalysts, if you will, for kind of the sell-off we saw. One of the things that's interesting, though, one of the major drivers of that surprise number was leisure and hospitality. They added 70,000 jobs alone, which is more than 5 times their trailing 12-month average. So we saw a big bump up there, and a lot of economists are citing the FIFA World Cup, which began June 11th, as a huge catalyst as hotels, restaurants, things like that, had hiring sprees to be able to service, all the influx of foreigners and U.S. and tourists and all that. So big move there. The unemployment rate held at 4.3% for the fourth consecutive month. Labor participation was flat at 61.8%. So, from an unemployment perspective, that's kind of flattened out for the most part. It's plateaued a little bit. Average hourly earnings were up 0.3% month to month, or 3.4% year over year. So, it's kind of in line with inflation. Hopefully, if we see that inflation number come down with those oil prices, we'll start to see, because, right now, if you're flat, if you're getting a 3.4%, gain in earnings, but then inflation's at 3.4, you're pretty much just keeping pace. I'd like to see that wage growth actually outpace inflation. Um, Hopefully we see that.
Yeah.
And then long-term unemployed was at 27.5% of all the unemployed. So that's up from 20.4% a year ago. So that's, the job market has overall been positive. Obviously, the
Mhm.
long-term was one of the kind of underlying negatives of there, but overall has been pretty strong.
Well,
Uh,
and that was one of the whole aspects, Chris, of the one big beautiful bill, was to bring manufacturing back to America. So that is happening. It's slow, and when they passed that bill, and everybody was skeptical about it. So all the tax cuts that were coming in, now people are getting that money here in the spring, and they file their taxes. Those who can, of course, some people file late, and then obviously all the employment that's coming in, from manufacturing. The other thing that's happening, Chris, if I can offer in employment, is everyone was really worried about AI. In fact, we talked in previous episodes how all those speakers were going around to college campuses for graduations, and anyone that spoke about AI was getting booed, because all the college grads thought, "Oh my goodness, AI is going to keep us from getting jobs because they're eliminating jobs." Interesting data point this week that two major car companies decided actually to rehire some people that they had let go, because they found that AI wasn't as efficient as they thought it was. It wasn't, they didn't get as much boost from it. They still needed their people back. So it's not necessarily perfect in AI. And it may not be as bad as folks thought. The other thing that's happening, which I think we mentioned in a previous episode, is a lot of folks thought, okay, well, we'll have AI and we can just let a lot of people go. But some companies have said, well, how about if we keep our people and we'll use AI to make them just more productive where they are, and it will grow instead of just stay where we were with less cost. So it's about growth. And the companies that are saying we're going to grow with AI are actually doing better. So AI to cause a labor problem isn't as bad a situation as everyone might have thought. Certainly, the college grads who are booing all their speakers.
Yeah, I mean, I think certainly you've seen. I think most stances have been, use it as a productivity boost, which I think is the best case scenario, right? For it is, and then that's been something we've talked in previous podcasts about it. That's been something that the U.S. has missed is where's this boost in productivity? That would be a meaningful add to our GDP. If we could get, a 4% increase productivity out of each worker. So I think that would be value add. I think the other thing is in some cases it's cheaper to have the employee than utilizing AI. Just like any capitalism, as if you have a ton of demand for these AI, you see costs go up. So, it sounds great, but then, AI is usually built on like tokens, things like that. And
Hmm.
once you realize, oh, we're using a ton of these tokens, and that bill that comes due is more than it was with the staff, you really start to kind of look at it a little bit closer there. So certainly seeing, definitely not perfect, but we're certainly seeing that kind of work its way through the labor market. One thing I'll add as well with the One Big Beautiful Bill Act is, as you said, Brian, and this has been cited by several analysts and economists, is it continues, as you said, right, to act as a fiscal tailwind for the economy. It's
Hmm.
supporting infrastructure, defense, energy spending, as this monetary policy has been tightening, or for the most part, and that's helped to cushion. A lot of economists have stated that that's helped cushion this. From a hard landing,
Hmm.
the Fed wants a soft landing. That's their goal, and
Always,
they're saying that
always.
one big beautiful bill has actually helped kind of provide more of the soft landing, which we've seen right now. I think, which has surprised a lot of people.
Yeah.
So.
Well, and Chris, how is all this affecting the international markets now?
So going over to international markets, yeah, I mean, I think the biggest thing that's still outstanding there is obviously the U.S. Iran peace framework, which we talked about going on. We there still is complications, driving from that, but the Strait of Hormuz traffic recovery is still. They were still having ships go through that, but you're going to have the normal stuff. You have insurers, things like that. It's going to take time for that to kind of work its way through on that front. And then the other thing I kind of noted from an international front is we mentioned this a little bit, but FIFA World Cup began June 11th in the United States, Canada, and Mexico. So we're starting to see that a boost. I would say a global boost kind of from that, as far as just excitement, things like that.
Yeah,
Um,
there's tens of thousands of people here that wouldn't be here normally. As we go through, we're going to go on till the end of July with all these folks, right?
I mean, yeah, 100%. I think, yeah, it'll probably taper off a little bit as teams, now we're down to 32. I think they're down to 32 and then 16. So as
Right.
teams, are eliminated, the fans usually
Hmm.
aren't staying. Most famously, I think Scotland, a lot of people saw the Tartan Army. They were eliminated in the qualifying group stage. So they did not get to, a lot of them went back. But yeah,
Yes.
I mean, it's been a huge boost, as I said before, with the labor, the everything there from the hospitality industry onto even travel.
Yeah. Well, no, it's been fascinating. So, and then probably the most interesting sector always is commodities.
Yep.
And I know you have some comments on that, Chris, and let's dig into
Yeah.
that.
I mean, I think the two biggest ones to point out, we kind of touched on oil. So oil has now kind of collapsed back down or came crashing back down after the Iran peace framework kind of came out. The WTI is now trading at about 77 bucks a barrel. Same with Brent crude, so like more the global. Um, they're both close to return to their pre-war levels, which is about 70 bucks. So we're right there. They're a little bit higher than that, but have fallen 40% from the peak at 138 bucks a barrel. So
Hmm.
almost half of what it was. So
Yeah.
that's been one of the biggest drivers, and as we said, that's going to flow through in inflation, things like that. And then the other commodity I think to keep on your radar is gold. Gold continued a bit of a pullback
Yeah.
from 4,327 bucks an ounce on June 16th back down to 4,000 an ounce for the end of June. That's now down more than 28%, below the January 29th all-time high of
Hmm.
5,589. So we continue to see pressure on gold.
Hmm.
Most of that's due to the higher yields, the stronger dollar. But I will say, a lot of countries and even banks have come out and said they're still buying gold. I think there still is a lot of buying pressure as far as net buyers. Central banks have remained net buyers. I think they bought 244 tons in Q1 2026. So I think the way I see this is more of a lot of people, they got into the gold fad. It ran up so much that I think a little bit of steam needed to be let out. And I see that right now. I mean, there was times, and Brian, we would be talking about that. We were looking at gold and we were like, can it even break 2,000? And now we're talking about gold 4,000 and 5,000. That's a pretty large move. And
Pretty
usually when you
amazing.
have a large move like that, it's not just straight up constantly, right? So you have to kind of let it
Right.
off a little bit. You're going to have some sellers come in, and then it's going to eventually kind of stabilize and then most likely move back up. So,
Yep.
and then the last one I'll mention, kind of a commodity, but Bitcoin. We've seen Bitcoin continue to just drop. It went from 75,000, which is still a far-fetched from its way earlier highs of over 100,000, to 58,000, 364 in June, end of June. So it's down more than 23% from that kind of late April to June.
Yeah. Hmm.
And it's on its pace right now for its worst week this week since February. So continue to see trouble within the Bitcoin market. Although, Brian, as you pointed out before, maybe people should be looking out and saying, should I be buying at this point? Because we had a similar thing happen when Bitcoin went all the way down to like $4,000, I think, on before it skyrocketed up to 100,000. So, different perspectives there, but definitely seen as far as momentum as of late, Bitcoin has certainly lost a little bit of steam.
Yeah, we've achieved a new recent low, but now it's rallying. It was down to 50 some, it's 58,000 now. It's about
Yeah.
61,524 as we sit here right now. But clearly, gold is the new Bitcoin, and Bitcoin was the new gold for a while there. So things kind of keep moving back and forth. The anti-currency people basically are the folks who are in Bitcoin and gold and different silver. And silver is being used for all kinds of different things that it wasn't used before. So there's this interplay between all the precious metals, which are seen as the storehouses of value, and Bitcoin was supposed to be the kind of the cool, hip, young people's gold of choice. So it's not that way anymore, and it was almost double where it is right now. So we'll see, but it could be a great buy, Chris. I mean, what is it worth? We don't know, right?
It's definitely, I mean, it's a speculative asset at this point.
Right.
You can make cases for it being a store value. I mean, you can, but I think at this point, it's really, the volatility is still there.
Yeah.
So whatever if anyone ends up buying Bitcoin, it's, I would akin it to going to Vegas and blackjack odds kind of, because you just don't know what it's going to do.
Well, and most commodities have that situation. Certain commodities, maybe you can generate some income from them, like real estate is kind of a commodity. Maybe there's some industrial uses for different metals and things like that. But a pure commodity is worth what the next guy will pay you for it at any given time, and their commodity is worth what you'll pay them for it. And Bitcoin is probably the most pure raw commodity there is, because there is no other value. It's not tied to anything. There's no income. You can't live in it like a piece of real estate. You can't turn Bitcoin into something that can conduct metal, and put silver into automobile parts and things like that. Can't do it. So Bitcoin is the pure commodity. So we'll see how it plays out. But if you were just Rip Van Winkle and you woke up and you bought it at 4,000, it's at 61. You never knew it was at 120. You'd probably be pretty happy right here. right?
True. That's a good
So
point.
so
Yeah.
it's still up massively from a decade ago when I bought it at $1,200 uh, dollars a unit in February of 2017. So
Hmm.
it's pretty amazing.
No, yeah, I mean 100%. I think it's just important to note, the volatility is still there, and it's not a store of value, as you would say, with maybe a gold or something like that. At least not at this point.
Exactly. Well, good. Well, I think that's kind of most of the economy, Chris.
Yep.
I think you know we're looking at all these different things, and economy is generally good. But there's always a million things as you lift up the hood, a million little things going on underneath the hood with the commodities moving around and going up, now going down, and it's really primarily gold, but oil, but gold's doing better. And then we see the U.S. stocks and international stocks are doing better. One thing that's definitely true, Chris, is that the international stocks are hanging in there. We have not seen a sustained international stock rally of this length in about 17 years. So it's been about a year now, it's somewhere around last summer
Yep.
when the international stocks started to take off, and they've hung in there, which is really, and they've been ranked number one for a period of time.
Yep. Yeah. I mean, we've seen both emerging and developed international markets outperform the U.S. markets. Even
Hmm.
last year, our best performing portfolio was our international portfolio, just on a
Hmm.
purely return basis.
Hmm.
You can definitely say it was due for a bit of a run on there, but it's good to see. I mean, I think that's a positive sign. If international is running that. Sometimes it's always tough if the US is the only kind of horse in the race. We don't really have anyone swimming with us. So the US is strong, the world is strong. That's a good sign for overall global growth, which is rising tides lift all ships kind of mentality.
Yes. So after all this, Chris, we kind of say to ourselves, after all the talk and all the chatter about what's going on in the markets, what are we doing about it, right? And before we get into kind of basic, like what we see out there, let's talk a little bit about our posture. So, for a short time earlier in the year, the four-star investment models, which include the four-star protection plan in bad markets, we were fully invested, and then we started to raise a little bit of cash because things got a little crazy. The AI stocks sold off, and they were so dominant in the S&P that we started to get signals of negativity in the S&P. We raised some cash, but then it stopped going down, and other things went up enough to turn things in a different direction. And so we ended up getting back in the markets about a couple of weeks ago, fully 100% in all sectors. Interestingly, the dividend stocks never went negative. They always stayed fully invested. It was all just the growth-oriented names with the swirling sectors in the S&P 500, the volatility in the S&P 500. The other thing that's really working and has continued to work is small caps, and we haven't seen a sustained small cap rally we've seen now for about 9 months, I believe, and we haven't seen that in a long time. And any of the old timers remember a small cap rally when it's really a big rally? And I was a partner at William Blair and Company years ago, and we were big small cap investors back then. And it'll go on for 3 or 4 years, and you'll average 30 to 40% a year when things are good. And we're getting good returns. We're not quite getting 30 or 40% out of small caps, but that's working. So that's an interesting trend under the hood, right? People aren't really talking about that. Usually, by the time the public gets involved in those asset classes, they've usually had their run, right? People don't recognize it. The
Hmm.
professionals pick it up, and the public picks it up later. But that's what's going on. And so our posture is right now that we're still fully invested. And while there may be a lot of negative chatter and there's all this consternation about the election, there's lots of consternation about what's going on with our 250th anniversary, which we'll talk about in a second. Nonetheless, the market's signaling higher. So we're invested, and we'll be that way until we see any other evidence, right?
Yeah, I mean, I think 100%. I think as we touched on the beginning, we may see some sector changes overall, but I still think, like you pointed out, growth stocks remain strong. There still is an underlying component of it um, that is still strong. Healthcare is running a little bit now, so we're starting to see a little bit more of breadth to the market, not just the semiconductors, not just the memory chips, which is positive overall.
Exactly. So, Chris, we're kind of come to the end. We have our segment called What We See Out There, interesting things. And I'm going to make a couple comments. You mentioned FIFA earlier, and we haven't hosted FIFA in a long, long time, and we haven't hosted the whole thing. But now we are, and it's quite interesting. There's Mexico City, Canada, and there's some matches up there, but a lot of them in America. And USA did win, and I think they've gone to the round of 16.
Yep.
And the thing about it, it's a different sport than most Americans are used to, because there's a lot of scoring in, baseball and hockey and football and a lot of scoring activity. But, FIFA has like one or two goals a game, or, matches will be 1-0 or 2-1. I mean, very slow scoring. So a lot of Americans are like, well, this isn't a terribly interesting sport. But it seems like everybody is always having a lot of fun. There's a ton of activity in the crowd, a lot of noise. Everybody's screaming and hollering for their, this guy's got the ball and that guy's got the ball. There's just tons and tons of activity and a lot of fun. So everybody seems to be having a great, great time. And Chris, you mentioned this whole issue of how many people are here in America. It's helping the economy and everything. And a couple really interesting things have come out of it. And it kind of, again, we talk about economics, we talk about our capitalistic system. It's making a case for the capitalistic system, because many people who are here in America now for the FIFA have never been here, right? So they're experiencing America for the first time, and it's quite striking that they really like America. And they're interviewing all these people who are like, the beaches are amazing. They have a famous clip that's going out around about an Australian soccer player who was talking about, we've been out at the beaches and they're fabulous. We all we hear is negativity about America from the media, and we love it. It's amazing. The other really interesting thing that a lot of the Europeans and a lot of the other foreigners are interested in is air conditioning. America has more air conditioning than any other country on the earth. Apparently, we didn't quite realize that, but I guess if you go to Europe, a lot of the northern areas of Europe are never that hot, so they never really got air conditioning. We're in headquartered city in Chicago, but you realize we get pretty hot, and we're pretty hot here right now, so we have the air conditioning on right now. But you go to northern areas north of here, northern Michigan, southern Canada, they don't really have air conditioning, right? I noticed that when we went to a couple of resorts in northern Michigan, and it got pretty hot. And we're like, okay, let's go in the room and turn on the air. There was no air, right? So a lot of areas don't have air, but America is known for air conditioning, and they're so impressed with air conditioning. The other really interesting thing is, um, I guess we didn't realize that this wasn't around the world, but they have this phenomena about ranch dressing. And there's tons and tons of people talking on the internet about, God, we love ranch dressing. We want to buy some cases and take them home. So these are the big things, and the general idea is, wow, we love America. Even the Bill Maher, who is the talk show host and who's generally been kind of negative on the administration and not a fan of of some of the things in America. He keeps talking about how they find America amazing. And the Norwegians did a very famous rowing video in New York City. They had like 300 people on this big platform, and they're all rowing and rowing. They're wearing Viking hats and everything, just having a blast, having a great old time. And maybe it's just because they're out of town, and maybe they've probably been drinking too much or something too, Chris. I don't know. But it just seems like everybody's having a great time. And so the FIFA comes at the right time, because now we're dealing with America's 250th anniversary. And, I remember the bicentennial in 1976. I was 15 years old, and it was a heck of a lot of fun, and everybody seemed to be together. Doesn't seem that way right now. It seems like there's a lot of divide between, the different parties, for example, and we seem to fight more now than we did, it seems. I guess that's gone ebbed and flowed in American history, but having the FIFA people here to remind America how amazing a place it is perfect timing for the 250th anniversary, Chris, which is this Sunday, or this Saturday, I should say. Right? So
100%.
perfect timing, I think, because America is an amazing place. We've created more capitalists. They're talking about taxing billionaires, and now there's a trillionaire. That trillionaire is in America. There's only one of them, and that's Elon Musk. There's more billionaires in America. There's more prosperity that's been created in the American capitalistic system, and so it's recognized. by the people that have come here, and they're here for a long time until their team loses, at least, right? And so it's been a very heartening for me to see this because we're huge fans of America, the freedom, liberty, capitalism, all the things that make America great. It's being reaffirmed, and I'll get choked up about it. I really love it.
I think it's great. I mean, I think the fact that it helps having, the soccer team, right? That's representing America, the USA soccer team, and it helps, right? It's just like the Olympics, right? It's you get to represent your country, and they're playing well. I mean, they're in the round of 16. This is the best they've done since 2020 or 2002, not 2020, 2002. So it's been
Hmm.
a long, long time since they've ever even really been this far. So, it really helps, I think, rally the country and kind of unify everyone behind, the common goal. We want to see America doing good. We want to see them competing. We want to see them winning, right?
Yeah, America's still the envy of the world, and more countries, if they adopted a lot of the things that we do, they might be in better shape than they are right now without despotic governments. A lot of it has to do with the structure of the government, obviously. So,
Yeah.
anyway,
No, I mean for sure. And I think the air conditioning, it's actually interesting. The Wall Street Journal had a article on this about France. France is notorious for not having air conditioning, and
right.
it's become a significant issue because their summers have gotten hotter and hotter. And I mean, they have a lot of cases, hospitals. There's no air conditioning, but elderly homes too. And you get a lot
Mhm.
of people now that are dying from the heat. And it's kind of just like, all right, yeah, if there's a solution out there with air conditioning, why not just kind of accept it? But there's still a lot of pushback on that. It still is a decisive or a divisive issue. The other funny thing that I saw is a lot of Europeans were just flabbergasted by the idea of free refills on soft drinks. They just
That's right.
were
That's right.
they were chugging their Coke and like, oh, I get another free one. They just could not realize that it was just unlimited. And so
But
yes,
since we drink too many sugary drinks, maybe that's a negative, actually, Chris.
it's probably overall a negative, but it's funny to see Europeans. Yeah, I think it's funny to see them, especially because even if Europeans have come in here, the tournament spread out. You have Kansas City, Texas. It's so broadly spread out across the country that
Boston, Seattle,
Boston,
they're all over the country.
exactly, San Francisco, that it's almost like different cultures everywhere. So I mean, certain areas you have, tourists going to Buc-ee's, those giant gas stations in the South and commenting on that. You have some going to the, Waffle House, these kind of, back roads, Americana-esque things that we don't really even think about and take for granted. And it's funny to see their reactions, I think, on it, as well as when you have the typical Bostons, those like that, which are a little bit more touristy, but I think a lot of them commented on the safety and the cleanliness, which was, I think, refreshing as well.
When they're walking through Walmarts and Costco's, just absolutely
Yeah,
flabbergasted and amazed at all the choices and how big it
it's
is.
very
And
true.
these are bigger than some of the towns they live in,
Yep.
So it's quite striking. Hey, Chris, we also had a wild SpaceX experience, didn't we?
Yep. Yeah, I mean that was the big thing that you mentioned. Elon Musk, a trillionaire now. A lot of that was due to the SpaceX IPO. It skyrocketed for off the kind of the initial launch, and then has now kind of stabilized and slowly kind of come back a little bit here. A lot of that's due to OpenAI news that they're considering delaying their own IPO till next year. Concerns about AI have really tempered the stock a little bit. It's always been, I think, considered a little bit more speculative, but it did debut, and I'd say overall the initial trading was extremely positive. It jumped from 135 up to 180 and went over 200 for a brief period of time. So, now we have SpaceX out there, kind of that first true, I would say, AI play. So we'll see if, what that does to the market. I know on Monday it gets added to the NASDAQ officially. So that's the first index that'll get added to. And then the last kind of thing I'll note real quick is kind of staying on that AI front, but AI capital expenditures are what, these top five US mega cap companies our spending on AI reached 723 billion in 2026. And that's up over 100 billion from just estimates at the start of the year. Amazon, Alphabet, Meta, Microsoft, and Oracle have issued approximately 121 billion in corporate bonds in 2025 alone, just to help fund this build out. And to give you a frame of reference, that corporate bond issuance is 4 times the usual prior 5-year average of corporate bonds that they issue. So we're seeing a lot of money get thrown around for AI. And, we'll see. We'll definitely see it. There's definitely having a major impact on the economy and the markets right now. But, we'll see if it all comes to fruition, you know?
Absolutely.
So,
Well, it's interesting, and congratulations to SpaceX and Elon Musk. We have a lot of investors that invested, Chris, while it was private through some of the private funding groups, and then a few people obviously that got some shares on the IPO, but it was very, very hard to get. It was a classic IPO where the demand significantly outpaced the buy. We hadn't seen an IPO like that in a long time. Anyone who was around in the markets in the 90s, that was the era of the IPO. That kind of changed in the last maybe say 15 to 20 years. But maybe that's coming back, Chris. And
yep.
SpaceX might be the kickoff.
No, I mean, we've certainly seen, I know SpaceX, Anthropic, as mentioned, OpenAI. There's definitely a bunch of big potential IPOs kind of lingering out there. So I think it's going to be an exciting, whether they go debut this year or next year, I think exciting as far as, what's coming down the pipeline for next year too.
All right. What else we have?
I think about covers it at least for this kind of holiday edition, if you will, the 250th anniversary, podcast.
Yeah, we can't overstate the impact of 250 years of a country that came out of nowhere. There was a rump crowd of people that wanted to leave the King of England when they came over to the new colonies, and the king was absolutely certain that he could keep this colony, all the colonies in his orbit. And these folks figured out how to escape the king and declare independence and create a new country called America. And it wasn't perfect to begin with, and it's certainly not perfect now, but it's evolved over time to become the greatest country in history of mankind. So we're very proud of it. And on this whole weekend, starting now, it's Thursday afternoon, and the markets have just closed, and the financial markets are closed Friday. So the weekend, folks, has basically begun, and we hope everybody has a great time. There's the big mall program in Washington, where all the states are out there with booths, and there's going to be literally millions of people flocking into Washington for the great state fair that we put on for 250. And it's an exciting time, and I hope everybody has a great 4th of July.
Yeah, everyone have a great Fourth, stay safe, and enjoy the holiday.
So we'll be back again, folks, at the end after the holiday with an update, and we'll see where the markets open after the 4th of July period. And we will end as we end our show here today. We got Ray Charles singing "America the Beautiful," everybody. So enjoy the weekend. Chris, you enjoy the weekend too. And let's pray for America, and let's pray for the world.
Sounds good.
Thanks, everybody.